The overnight weather data maintains strong demand through Sunday, then easing early next week as the frigid Arctic cold pool retreats into northern Canada and a ridge sets up to replace it with warm highs of 60s to 70s over Texas, while also mild up the mid-Atlantic coast and northeast. However, the weather data has been colder trending with a system into the northern U.S. late next week with lows of -0s to 20s for a swing back to strong national demand and where numerous HDDs have been added, especially in the European model. Natural gas markets initially moved higher on Friday to reach towards the $3.14 level. However, we have turned around to break down below the $3 level as cold over the Midwest, Plains, and Texas will rapidly moderate the next several days, with highs reaching the 50s to 70s by late this weekend. Overall, very strong national demand through Sunday, easing to moderate for early and mid next week, then back to strong late next week. On Thursday, the EIA reported a 237 billion cubic feet withdrawal from U.S. gas stocks for the week ended February 12, but traders are already looking ahead to next week's report. Because of the supply disruptions in Texas, some analysts are pointing to a draw of 320 BCF, but that number is likely to be revised several times before the report is released next Thursday. It is unlikely that the upcoming report breaks the record 359 BCF weekly draw reported in 2018. But it should move the number below the 5-year average for the first time since 2019 as the bullish setup continues to deepen. La Niña conditions continue with a 60% chance of a transition to ENSO neutral during Northern Hemisphere spring 2021. This should continue to send the market back into the springtime trade, demand will be dropping, and at that point I suspect that natural gas will go looking towards the $2.80 level or so underneath.